Wolfpack, I want to make a video to clear the air a little bit and give you guys my bull case scenario. As you guys would have known, as you guys would have seen by now, look, I guess I'm bearish on the market. It's hard to be, I don't like saying that though, right? I'm bearish to a certain extent. I think that the technical analysis, what the technicals are showing me on Bitcoin, lead towards the bearish argument more than they lead towards the bullish argument. I don't think if we see a bear market, it's going to be a typical bear market. And so I'm inclined to believe that, yeah, we might see a typical bear market, but it also is a possibility that we might just see something like we saw from July and May to July, right? That's definitely a possibility. Not necessarily a bear market, but at least a bearish phase in the market. Now, what I want to be going over in this video is the evidence that suggests, that goes against my opinion, and at what point I will consider that evidence valid, and at what point I'll be re-entering the market, because there is obviously, not even a weak chance, a chance, like a substantial chance that I'm wrong, right? Because essentially what I'm doing right now is I'm betting against a trend that has been going on for a decade, okay? And the reason why I feel it necessary to bet against that trend is because we're invalidating that trend in terms of technical analysis. We've done things we haven't done in previous cycles, and so I'm thinking the trend is becoming slightly more obsolete than it has been in previous cycles. And that is due to the fact that we're seeing all this stuff coming out in the media about the virus and about certain things regarding Evergrande, inflation, etc. I'm going to be releasing a video on that stuff tomorrow. Keep an eye out. I'm going to be releasing a video tomorrow basically going over whether the 4-year cycle theory is invalidated. Because I think that even if we do go up here to new all-time highs, it is worth considering. Because some stuff's happened here that is undeniably not normal. Okay? This was not meant to happen. Wasn't meant to happen at all. I'll tell you when the last time in this chart was natural price action. This was the last natural price action on this chart. Okay, as soon as we dropped below 63k, the price action became unnatural. And that's when I started exercising caution, started convincing you guys to exercise caution, or telling you guys to exercise caution, recommending whatever it may be. And so the reason why I'm not overly concerned about my price predictions now is because if we go up a little bit, we go up to bloody 61.1k, cool. I've been cautious since 66. So, if I buy back in at 61, I'm still buying back in lower than when I sold. So, look, I don't really care. But I'm just looking at what the technicals tell me. The bullish argument, right? I'll go over the bullish argument now. And this is the most bullish argument I can come up with, right? Because we have lost many, many, many critical zones, right? I've gone over the bear case. Let's go over the bull case, okay? The bullish argument is that what is happening now is just a normal correction, okay? We don't have much data from previous cycles. We've only had 2 full cycles. And so the amount of data we have to kind of put together an idea of the 4-year cycle theory or lengthening cycles theory in our heads is very, very limited. So something like this happening may not be invalidating the 4-year cycle or lengthening cycles theory. It may just be a new sample point we can use to put into our data, right? Especially if we've got a new all-time highs. And so what I'm seeing on this chart that is actually bullish, right, is the fact that in this drop, similar to the drop we had back here in September and similar to the drop we had back here in May, we are dramatically below the Bollinger Bands, okay? So we are due for a bounce. Now, that could be a dead cat bounce, but the reason why I think it could be also a bullish bounce is because we have downtrending RSI similar to the downtrending RSI we had in September. Okay, look, in September, we had a downtrending RSI. We also had this downtrending RSI, this exact same downtrending RSI, back here all the way from January, right? January all the way to May before we crashed, okay? And you'll notice that when we broke this downtrending RSI in July, this one that had been forming for 7 months, we broke it here. We immediately zoomed up in the coming months after that from 29k all the way to 53k, okay? You'll also notice when we broke this downtrending RSI in September, we immediately zoomed up from around 40k to around 68k in the coming months after that. We're currently seeing a downtrending RSI, and we're entering territories similar to the territories we're entering territories similar to the territories in which we bottomed out on in the last 2 downtrending segments of RSI. So this would suggest that the bottom is very, very, very close. I would say it suggests that the bottom is above $47,000. And the reason being is because we have the 50-week estimate at $47,000, okay? We also have a very undervalued MACD. The MACD has not been this undervalued many times in history. In fact, this is the second most undervalued, or the second lowest the MACD has ever gotten on the histogram, right? The first lowest was in May. This is the second lowest it's ever gotten on the histogram. In terms of RSI, we are also in levels that we have not approached for a sizable amount of time. We approached these levels in May and in April. Besides that, we approached these levels back here in the COVID drop. So we are undeniably undervalued, right? There is also things like the CBBI and the stock to flow model or something like this, right? And this would say that and this is a website that I use. The CBBI Rainbow, not the stock to flow model, essentially shows how overvalued or undervalued Bitcoin is using all of these metrics here that you see on the screen in form of number. So 55 means that we're about halfway valued, right? If we reach 100, it means we're completely overvalued and the top's in. If we reach 1 or we reach 0 or close to that point, it means the bottom is in, okay? You can see it's worked out pretty well historically. Okay, we can see that in 2013, it called the top at 100 exactly to the day. It also called the bear market bottom almost. It reached 2 confidence, right? And that was the bear market bottom. It also reached 3 confidence in the 2018 bear market, and it reached 100, called the top to the day as well in 2017. We haven't seen a top in this cycle as well, which means that would suggest that the top is yet to come. We can also see that this cycle is pretty similar to 2017, even with this kind of this double rounding out formation. Let's go to the weekly chart, and we can see. Let's go to weekly chart. Let's go on log scale quickly. I'll show you something that is quite compelling. We had in 2017, something similar, right? 2 little rounded out heads and then a move to the upside. We've seen it here. 2 little rounded out heads and then, assuming this plays out, a move to the upside. So it's not like what we're seeing is completely abnormal. We have seen it before to a similar level. The only problem with this argument, though, is that we didn't break below critical support on these rounding heads like we have done on this time. Look. And I suppose to end this video, and that's all there is to say, right? Because there isn't an overwhelming amount of bullish evidence, okay? The reason, and kind of a last bullish point I want to give to you guys, right, that is basically just food for thought, is that this drop was caused directly by global fears, okay? Global fears and market manipulation by exchanges and institutions, okay? The market is no longer retail controlled. The market in previous cycles was fully retail controlled, okay? In 2017, this was all retail. In 2013, it was all retail. There were very, very, very few large players in the market in terms of institutions and exchange money manipulating the price. 2021 will go down, in my personal opinion, as the year of manipulation in the market, because it is the first year in the cryptocurrency market where there has been massive institutional interest in cryptocurrency, and that is due to the virus, right? Because it's the same thing with the housing market, right? What have all companies done in the housing market in the housing market during COVID? They bought up all the houses, okay? Same thing. People are flocking, and specifically smart money, because they know the effects of inflation. They're flocking to assets like cryptocurrency, like gold, like the real estate market as hedges, okay? Because they know that this stuff is going to be very, very useful, at least for the future, because they know that the current monetary policy is in fact doom. And so what they're doing is they're manipulating the price, and they started doing it in 2021, and they're manipulating the price to try and steal money from retail investors to strengthen their positions and hence increase their power in the future. That's something we haven't seen before. And that's something to consider when analyzing previous trends, okay? Because we are in a different market now. We are in a market controlled by manipulation. It is not impossible to make money in a market controlled by manipulation, because technical analysis still stands. That is very important to note. For example, bearish divergences on the RSI were playing out these entire pumps, right? Even though there was an immense amount of manipulation that were making the drops exponentially bigger than they ever could have been, you can't say that it's all manipulation and that it's not my fault I lost money. A bearish divergence was playing out on Bitcoin since January, right? And we continued the upwards trend until April. There were clear signs that we were losing momentum. And we've gone over this before, and we've predicted the bottoms, we've predicted the tops. Let's just go over what we've done just based off of technical analysis to show you that technical analysis is not obsolete because of manipulation, okay? We've predicted, Wolves of Crypto was only made in this period here, okay? But we predicted around here, mid 50K area in May, that this was the top. Why did we predict that? Because Ethereum was pumping and Bitcoin wasn't pumping. It was the top, we dropped down. We predicted in July that this was the bottom. Why? Because we held support so many times and bullish divergence was playing out and we were on the verge of MACD cross. It was the bottom. We predicted in September that this was the top here. Why? Same reason as before. We predicted in September that we were going to hold 40k. We held 40k, okay? And now we've predicted this is the top here. We predicted that at around 66k. And the reason why we predicted this is because of the bearish divergence and also because of the fact that we rejected here and formed a lower high. Okay. When that happened, that was a critical moment. We predicted, well, I wouldn't say we predicted the top because I didn't predict the top, but I strongly recommended that we exercise caution. And I kind of recommended to you guys that you exit some of your profitable positions. Okay. That is when, go back on my tweets, go check. That I exercise caution in the market. And when we broke below 53k, that was a definite signal for me. Now, so look, that's an interesting one to consider for the bullish case. It means that, this was ruined by manipulation and it could be salvaged by manipulation. So that's interesting to consider. And there are bullish arguments. And I've gone over some of them there. There's no doubt way more. There's no doubt you can probably whip up 10 charts right now that are all bullish, but you could probably whip out 20 that are bearish, okay? I'm not saying that my prediction that I've made in my last video about the bear market is going to be 100% correct, is going to 100% play out. The way I'm seeing the market right now is to a certain extent, we're entering uncharted territory, unmapped land. We don't necessarily know what is going to happen. I'm looking at the technical analysis. I'm saying that, hey, we've broken below some critical levels. It looks as though we're going to go further down after a dead cat bounce, right? And that's one thing to consider about the bullish argument, right? One of the bullish arguments I went over in this video was the fact that we had the RSI, which get it back up quickly, in a downwards trend. And historically, when we've had these downwards trends, when we do break it, which inevitably does happen, we usually have a strong rally to the upside. Now, this doesn't mean we go to new all-time highs. That's my argument, right? I think we are going to have a dead cat bounce. I've said that. I think that dead cat bounce is going to come above 47k, and I think it's going to take us to around 53k to 58k, somewhere in that region. If it takes us above 61.3k, that would be a re-entry signal for me. 61.3k, if we close above that region, I will re-enter the market confidently and knowing the fact that we'll probably reach all-time highs, right? That would be a comfortable re-entry for me. Now, what I'm fearful might happen is that we might see a break of this line here, right? We'll see a rally. People will get very bullish. They'll think the bull market is back on. We'll go up to around maybe 53k, maybe even higher to around 58k. We'll reject from this region or this region. We'll see that little dead cat bounce to relieve some pressure, and we'll have some new fuel for another drop, and then we'll slowly just decline over time until around November next year. That is my fear in the market. Obviously, that can be invalidated, but this is the most logical position I'm taking. Now, as I said, there are bullish arguments. We'll have to monitor them closely, but essentially that's how I'm looking at the market right now. The bullish arguments are there. They just don't seem strong enough for me to risk massive amounts of capital in favor for. I'd rather wait for something to happen, because remember, guys, we weren't bullish in this region here. We weren't bearish in this region here. We weren't bearish in this region here. We're bearish now for a reason, right? There are reasons for me saying these things. I'm not just saying them because I'm scared or fearful. I'm looking at this from a non-biased perspective, and that's what I'm seeing on the charts. I'm saying to myself that I'm not in the market at all right now, except for my base BTC holdings, which I hold regardless of what happens. And I'm looking at it from a non-biased perspective as someone who's not in the market. And I'm saying, if I buy in now, I have a lot more to risk than I have to gain in the short and medium term. That's why I'm not buying back into the market. Thanks for watching, guys. I hope you enjoyed. I'll bring more content explaining particularly whether the 4-year cycle is invalidated or not tomorrow. Stay tuned for that. I know a lot of people are curious about that question. Thanks for watching, guys. Hope you enjoyed it. I'll catch you in the next one.